Hello, welcome back. And today we're going to have a very interesting topic of discussion. So my title is this a luxury home housing market crash? Luxury home crash. What I mean by that? Okay, lately we've been hearing about the global warming, we've been hearing about climate change, and we've been hearing about the adverse weather conditions, hurricane, insurance crisis, uh, homeowners association crisis, mainly in Florida and some other areas of up and down the coastal areas of the United States. So we're going to take a deep dive into this. And so this could be a tip of the iceberg, okay, with respect to this unique asset class, meaning luxury home price crash in the selected areas of the country with the weather conditions that I just mentioned. So let me share my screen right now, and I'm going to use this article just came out not too long ago, and it is right here. This article, CNBC, luxury homes on these beaches are losing value fast as effects of climate change hit hard. This article by this pretty famous lady, Diane Orlick, whatever her name is. So here's some of the excerpts from this article as I highlight the yellow areas as emphasis to go over was my takeaway about this article. And I think it's going to get worse before it gets better. And I'm going to show a map in the areas that are affected by all these issues. And when you talk about coastal areas, we're talking about prime real estate areas with very, very high price point. So luxury home price, could it be crashing? So I would love to hear your comments wherever you're living right now. If you're living in the coastal areas of the US, please comment below as I finish this video. So the beginning, the first paragraph of this article, as sea levels rise and storms intensify, coastal real estate is seeing flooding and erosion like never before. Some of the nation's priciest coastal real estate is in an increasingly precarious position due to climate change. Further, various risk models have shown myriad projections for falling real estate values, but the effects of climate change are already hitting the market and at a faster than most expected. Wow, this is very much of a breaking news, okay? So there are various risk models where various companies are beginning to do a lot of projections, not only for this year, but beyond this year, several years down the road. So you have to think short-term and long-term, how this climate change and all the things is gonna take effect. It's gonna affect a lot of home values, especially the real high end. So this example talk about this Nantucket home right off the coast of Massachusetts. There's one example on this particular article in a short video, which I'm not going to show the short video. I'll give you the link below so you can play the short video by Diane Orlick on this Yahoo video. And this one example showed this coastal Nantucket home over the last summer was listed for over $2 million. And it was sold earlier this year, 2024, for just $600,000. Wow, what a steep. Now, this is a sort of a somewhat rare exception because this area of Nantucket, the sea level rise and the intense rainfall is the main culprit. But then again, who's to say that in the next few years and beyond, other areas, other coastal areas, high-priced coastal areas of the U.S. are potentially have a similar fate, right? So let me say anything else I need to go over. And now, the initial research by this company is looking at zip codes just on the east and Gulf Coast of the U.S. 30 of the zip code that are being researched have a median home price of at least $1 million. In just these areas under survey, a combined 77,000 properties are at significant flood risk, according to this research firm, First Street, and the climate risk data and analytics firm, First Street. That is roughly 100 billion in potential losses of these high-priced coastal trophy real estate markets. All right. So now let me give you some example what's really happening. So let's go to the Google map. Now, Nantucket, which I've never been there. I mean, I live in the East Coast. I was raised, grew up in the East Coast, but I've been to Maine one time, but I never stopped by Boston areas or Nantucket. But the article mentioned the $2 million home in Nantucket was reduced within a year to 600,000. It is located right here. As you can see, this is the playground of the wealthy, but Nantucket. So if you look at some price of the home is 1.6 million and so forth, right? Now, so this is just the upper northeastern section. So let's go down the coastal areas of the U.S. and let me reduce the size. Let's go down. Let's head down the southeastern coast, where some of the risk and exposure that are bound to hear it in the coastal market. Now, again, if you talk about Virginia, the Virginia Beach, and of course, North Carolina, the coastal areas of North Carolina could be affected, right? And from time to time, we hear some news about North Carolina coastal area being adversely affected by the flooding and hurricane and what have you. So Wilmington, North Carolina, look at the coastal prices, home prices. It's pretty pricey, $500,000 on the average in the North Carolina coast, just the average. Now we go down to South Carolina. There are some hurricane issues going on, but the price point is, like I said, it's $500,000. But the biggest challenge, the biggest things we can hear about moving forward, obviously, is Florida. Now, okay, I'm not gonna paint a doom and gloom picture of Florida because in light of the recent negativity around insurance crisis and HOAs, it's only affecting a specific asset class. What I mean by that is the insurance crisis and HOAs in Florida that we've been hearing, the condo crash, right? The condos that are, more than 30 years old, for example, that are more than 3 levels high, they are being evaluated on assessment costs, and they have to bring up the reserves. What happened a few years ago, right? The Surfside Miami condo collapse. That was the breaking point. That triggers all the insurance crisis. So a lot of those homeowners in Florida that live in condos, are 30 years old, that are 3 levels or higher. A lot of those condo HOAs, they have to be reassessed, and as a result, the insurance company, right? They are not. A lot of major insurance companies are leaving Florida because they can't. The risk is just too great to continue to insure those homeowners. So the low-end condos, not just in Florida, along the Atlantic coast, as you can see right here, and the Gulf Coast on this side, right? Along the Southwest Florida, Cape Coral, and Sarasota, and even Tampa Metro to the West Coast, and up and down Atlantic coast, especially Miami, right? And if you do not know, some research firm indicated that Miami Beach will sink in the next generation, next 50 or something years. But meanwhile, again, I'm not saying Florida will continue to grow, but number one fastest growing state in the country, but the growth is migrating, is moving away from the coastal areas, is moving away from condos. So if anyone that own condos that are newer, right, that meet the safety codes, that are the high end. Look, there's a lot of condos in Miami is multi-million dollars, right? I mean, as you can see coastal areas, we're talking 1 million, 10 million, $20 million. Those luxury condos, they are fine, at least for this generation. I don't know, but personally, I would not, even if I have the money personally, I would not want to buy. I know Miami is up and coming, it's the Wall Street of the South. We get that. We see a lot of migration of wealthy people, baby boomers coming down into Florida, specifically into South Florida, and they buying multi-million-dollar condos with all cash or whatever, right? Not only that, you have international wealthy people coming into Florida and buying up all the high-end condos, especially in South Florida and also in the a little bit north, which is in Fort Lauderdale, Boca Raton, West Palm Beach. You could make the argument, and Miami, of course, and Hollywood. This area is called South Florida. You can make the argument, this is the Gold Coast. People, the millionaires of the world, they're still flocking into South Florida. They don't care about the weather conditions, right? But the locals, right, the lower end condos, the middle class and lower middle class people that used to live in those low end condos that are being affected by the insurance crisis in actual ways. They are moving. They're not necessarily moving out of Florida. Those people with limited budget, they're trying to sell their condos, but good, right? You can sell it at a loss. So yes, condo crash is really happening. To what extent, we don't know in Florida, so remains to be seen. But look, the wealthy people, the upscale people, they still like the coastal areas of Florida, and it's not going to sway them because they have buy a lot of these houses, these multi-million-dollar houses up along coastal Atlantic coast of Florida and the West Coast. They are buying all cash. They don't even have any mortgages. So the lower middle class of Floridians, they are not necessarily moving away from Florida. They're moving into the central coast of Florida, away from the weather conditions. So the fast growing areas. Look, Florida itself, as you can see, there are not there's not much land left because of over here. Down here, it's not buildable, right? We're talking the Everglades. It's all mush land. It's not buildable. So it's very, as you can see, Florida is running out of land because there's only very, like, it's just like South Florida is no different than Bay Area where I live, San Francisco, for the past 30 years. It's just that there's not enough land. There's just too much demand. There's running out of land, and the land is precious in South Florida. So similar with Fort Myers, Cape Coral, going through some condo hurricane issues, insurance issues, HOA issues. But if you're talking about Naples, I mean, look, even the Gulf Coast, I mean, it's a very, very expensive homes located in around here. We're talking in Naples, right below Cape Coral, we're talking multi-million-dollar homes, right? So those people are not going anywhere. Those retirees and people with with big bucks, they are staying put. So only the coastal areas, people will try to sell. Even the high-end condos in the next few years going to be selling at a loss. So you can make the argument there may be some investment opportunities for people who want to buy at a discount, right? When you see a stress in the luxury home market with the weather conditions, especially in Florida and up and down the Atlantic coast, right? And the Gulf Coast also. In fact, let's go over the Gulf Coast. All right. So, when there's always two sides, right? The one side is the sellers who want to sell. They're under distress. So the buyer on that end, they have a leverage. They have negotiation power. So the game will be played out in the next few years. So there are some opportunities and there are some challenges depending on which side. Are you on a buy side or you on a sell side? Do you have the money? Do you have the capital to pay all cash, even though you may get a 50% discount on the multi-million-dollar condo or single-family home along the coastal areas of Florida? It doesn't mean that you can pull the trigger. You got to have enough capital, right? Either yourself or you can partner with some wealthy individuals, do a partnership, do a syndication, and try to buy this distressed coastal areas of not only in Florida, but up and down Atlantic coast and also in the Gulf Coast as well. So speaking of Gulf Coast, let's briefly go over the other areas that the luxury home cash are being affected as a result of the global warming, climate change, hurricane, insurance issues, and the whole 9 yards, right? See, here's the Gulf Coast area of the U.S. and see the home prices are, like I said, $500,000 to $1 million on the average along the Alabama coast. We're talking, coastal Alabama, and coastal and Louisiana. I don't care too much about Louisiana and Mississippi for some reason. Well, maybe coastal is still kind of expensive, but I don't particularly like Louisiana, Mississippi. It's just economically they're not growing. Now, in the final area that I'm concerned about with the, as a part of this presentation is the Gulf Coast of Texas. We're talking, Corpus Christi. We're talking, where else? Galveston, right? And we're talking Padre Island. These coastal regions will be affected as well. And the coastal prices, condos and single-family home, like I said, anywhere from $500,000 to $1 million. So it's affecting them as well. And finally, you could even make the argument that so this is it, right? We're talking the Atlantic coast, the Florida coast and Gulf Coast, and along the Gulf of Mexico, Texas, Alabama, all these areas will be affected by all these adverse weather conditions. And California is a little bit different, right? California affected by the wildfire. Insurance companies are raising the premiums. And the coastal areas of Southern California, which is the most precious piece of land on earth, right? Still multi-million-dollar homes up and down, Orange County and San Diego County. And I don't see hurricane issues. There's some earthquake issues in California, of course. Insurance premiums are rising or skyrocketing just like anywhere else along the high-risk coastal areas. And so I think California pretty much okay, other than the wildfire and the potential earthquake and flooding and all that. And so California coastal area, even in Northern California, where I live in San Francisco Bay Area for the past 30 years, are affected by the insurance crisis. The premiums are rising. So here's the bottom line. The bottom line is, this is the question, is this the tip of the iceberg, right? I mean, you have to determine if you are a potentially wealthy baby boomer, if you want to retire into somewhere along the Atlantic coast, up and down the Atlantic coast, or in Florida, or in the Gulf Coast, and people are still going to go there. People are still going to, upscale people that have the money. They still going to go to these coastal areas because, right, I mean, we're talking paradise, we're talking warm weather all year round. People still going to migrate from the Midwest, from the Northeast, and from the West Coast, expensive. California, still going to go to Texas. People still going to go to Florida. So the question is, to what extent, giving this, negative headlines, given this negativity that's going on moving forward. So a lot of people might think twice before retiring into these weather affected areas. So because luxury home prices could be adversely affected for the foreseeable future. So only time will tell. So I will monitor this for you. So with that said, my takeaway is, it's just that you have to take a step back and be careful if you're going to invest, if you are a real estate investor, if you want to invest in this high-priced trophy coastal markets, right? Then you have to think twice, do more research, visit the area, whether you want to buy a vacation home in this high-priced market, or whether you want to become an investor to buy this home for rental purposes, for vacation homes or whatever, right? And so you don't want to risk most of your money. You want to diversify your money. So don't buy a luxury home price not knowing about the future, right? The future is very, very, very challenging based on what I just said. All right. So with that said, if you receive any value from this presentation, please like and subscribe to my YouTube channel. And also, if you have not already done so, please put your email on the bottom of on my website so you can become a free member of our real estate investment community. So you will learn more about all aspects of real estate investing from a high level global, nationwide perspective. All right. Thank you so much for watching. And this is Seewing Yi. I will see you on the next video. Have a nice day. Bye-bye.